Welcome to the YouTube channel of FinSim. My name is Raghu, a certified financial planner and founder of FinSim. I'm sure all of you would have been flooded by now with news around the changes which have been introduced in the budget presented by the Finance Minister of India. This video should help you in understanding the impact of changes done on personal income tax. First change introduced is for the taxpayers who have adopted the new tax regime, wherein if the taxable income of the taxpayer is less than 7 lakh rupees, then no tax will have to be paid by the taxpayer. Earlier, the same limit was 5 lakh rupees. For the benefit of individuals who don't understand what the old and new tax regimes are all about, let me help you understand the difference. Under the old tax regime, taxpayers' taxable income is divided into 3 slabs for calculating the tax liability. Up to 2.5 lakh rupees of taxable income was exempted from tax. Next 2.5 lakh to 5 lakh rupees is taxed at 5%. 5 lakh to 10 lakh rupees is taxed at 20% and income about 10 lakh rupees is taxed at 30%. Let's understand this with an example where the taxable income of a taxpayer is 12.5 lakh. As per the tax slab, first 2.5 lakh rupees would attract no tax. 2.5 to 5 lakh rupees would be taxed at 5%, resulting in a tax liability of 12,500 rupees. 5 lakh to 10 lakh rupees would be taxed at 20%, resulting in 1 lakh rupees of tax liability. And finally, 2.5 lakh rupees, which is nothing but amount over and above 10 lakh rupees, would result in a tax liability of 75,000 rupees. So the total amount of tax which needs to be paid in this case under the old regime would be 1,87,500. Under the new tax regime, taxpayers' taxable income is divided into 6 slabs. First 2.5 lakh rupees is completely exempted. For the next 2.5 lakh rupees to 5 lakh rupees, tax should be paid at 5%. Next 5 lakh rupees to 7.5 lakh rupees is taxed at 10%. 7.5 to 10 lakh rupees at 15%, 10 lakh to 12.5 lakh rupees at 20%, 12.5 to 15 lakh rupees at 25%, and anything above 15 lakh rupees taxed at 30%. Using the example of 12.5 lakh rupees of taxable income to calculate the tax liability would result in 1.25 lakh rupees of tax liability. In both old as well as new tax regime examples which we looked at, I have ignored the education cess of 4% which is levied on the tax computed, as it remains the same across both regimes. If we now compare the tax liability between both regimes, new tax regime obviously will emerge as a winner, where the taxpayer will have to pay 62,500 rupees less to the government. So why would one worry about choosing between old and new tax regimes? One of my good friends used to always use this phrase, "The devil is in the details." This is where one needs to understand the difference between what income and taxable income is. In all my previous examples, I specifically used the term taxable income. Let's understand once again with example what it means. First, under the old tax regime, if a taxpayer's total income is around 17.5 lakh rupees, taxpayer can claim multiple exemptions under different categories to arrive at taxable income. In this example, I have considered 5 lakh rupees as exemption to arrive at taxable income of 12.5 lakh rupees. There is an exhaustive list of exemptions. I am naming few here. Standard deduction of 50,000 rupees is available for all salaried and pensioners. House rent allowance based on few conditions and calculations. Investments done in ELSS mutual funds, insurance, EPFO or PPF or FD for 5 years and few other instruments. One can even deduct the tuition fees which would have been paid towards his or her kids. Any medical insurance paid for self and family or parents can also be deducted subject to few conditions from the total income. Interest paid towards housing loan Up to 2 lakh rupees can also be claimed and can be deducted from the total income. Similarly, there are other exemptions which can be claimed on a case-by-case basis to reduce the income to arrive at the taxable income. Unfortunately, no such exemption was available under the new tax regime. So the total income of a taxpayer would remain his taxable income as well. I hope you now understand the primary difference between these two tax regimes. Coming back to the change brought in the budget, taxpayers with taxable income up to 7 lakh rupees will not have to pay any tax under the new tax regime. However, if a taxpayer were to select the old tax regime, tax will have to be paid as per the tax slabs of old tax regime. Second change announced is associated with the tax slabs for the new tax regime. There were 6 income tax slabs earlier in the new tax regime, which is now reduced to 5, and also the income range has been amended. Under the new slabs announced, income up to 3 lakh rupees will attract no tax. 3 lakh to 6 lakh rupees will be taxed at 5%, 6 to 9 lakh rupees at 10%, 9 to 12 lakh rupees at 15%, 12 to 15 lakh rupees at 20%, and any amount above 15 lakh rupees will be taxed at 30%. Next question which might be coming to your mind is, did he not say income up to 7 lakh rupees is exempted? Then why is there a tax slab for 3 to 6 lakh rupees and 6 to 9 lakhs? This is where you need to read the lines very carefully. As per the income tax law, if a taxpayer's taxable income under the new regime were to not cross 7 lakh rupees, then there won't be any tax liability. But the moment the taxable income crosses 7 lakh rupees, this exemption will no longer be applicable and the taxable income will be taxed as per the tax slabs introduced. Third change in the budget is with respect to standard deduction. As we saw earlier, when trying to understand the taxable income as per old and new tax regimes, no exemptions were allowed under the new tax regime. So a taxpayer's total income would eventually be his or her income as well. In the current budget, taxpayers adopting new tax regime are allowed to deduct 50,000 rupees from their total income to arrive at the taxable income. Fourth change is associated with the surcharge which is charged to high income taxpayers. Currently, the highest amount of surcharge which the taxpayers will have to pay is around 37% in both old as well as new tax regimes. Current budget has capped the maximum amount of surcharge to be paid at 25% for taxpayers following the new tax regime. For the old tax regime adopters, it would still remain the same. Fifth and final change is associated with the amount of money exempted as leave encashment for non-government salaried employees. Maximum amount of money which was exempted earlier was 3 lakh rupees set in 2002 and the same has now been revised to 25 lakhs. Stay tuned to our channel for regular updates on aspects impacting personal finance. Please like this video and subscribe to our channel to receive notifications when new videos are released.